So viewers, in this video we'll be going over WTI crude oil, ETF ticker symbol USO. In this video we'll be going over the day-by-day probability for WTI, how we found the models, and the forecast models for each WTI. And back to the technical analysis. Today we are down 4.6% on the 1 hour chart. We are touching oversold RSI. The 1 hour MACD is now negative. For the 4 hour chart, we are approaching negative MACD, so we may head down lower, and we also are not touching oversold RSI yet. And the next possible support that I see is a 200 moving average on the 4 hour chart. So if we expand out to the daily chart, we see a divergence shaping up today, and we lost support on the 18-day moving average, this purple line. So other than the 200 moving average on the 4 hour chart, the next possible support will be the 50-day moving average, this yellow line, and that is around the price of $12.26. So that is our first immediate support, and that coincides with past resistance that dated back to September 19th of last year. And as for resistance, if we do manage to come back from this large decline, the next resistance will be the 18-day moving average, which we found some support around that range, which is around $12.80. And since we're below that price level, that now acts as our resistance. So if we were to move up higher, that price movement is roughly around 1.9% to the upside, and to the downside it is around 2.5% to the downside. So let's head to the day-by-day probability model. So on here, what we have is we still see extreme cases where as the day progresses to a week, we still see a large drop in oil, as opposed to a large movement to the upside. No extreme cases on the third and second standard deviation. If we look onto the downside, we still have 50% chance on the 7th day. However, we do have 14% chance on the 7th day. We will fall around 4 to 8% down. So as the day progresses, it's starting to favor to the downside for WTI crude oil. So let's head to the day-by-day forecast model. So again, this model is now available in the link below, so do check it out. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. This trend dates back to February 9, 2018 to May 8, 2018. So let me point out why these two charts are similar. So in the beginning of the trend, we start off below the middle Bollinger Band, and after that we proceeded to average above the middle Bollinger Band, and we have that instance there. And then we took a slight dip below the middle Bollinger Band right at this instance. And then once again, we average above the middle Bollinger Band once more. And then finally, right towards the end, we touch the middle Bollinger Band, or we revert back to the mean. So we have those points there. So on the trend in question, we start to see a similar pattern, touching the bottom Bollinger Band or averaging below the middle Bollinger Band. Next, we see it average above the upper Bollinger Band at this instance. Next, we see it take a slight dip on the bottom Bollinger or middle Bollinger Band, slightly below the middle Bollinger Band. And then finally, we average above the middle Bollinger Band, and right there, and right towards the end, you'll see a candle right near the middle Bollinger Band, so I'll mark that. So we have about 1, 2, 3, 4, 5 points. We also have 1, 2, 3, 4, 5 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was February 29th or February 9th, 2018 to May 8th, 2018. Back then, WTI crude oil was up around 2.9 or 3%. So it does manage to regain its losses today. So let's head to the day-by-day probability model. So that is where on the 7th day, between 0 to 4% on the 7th day, close to 50% chance, but still in favor of to extreme downside on this instance. So if we combine these, 42 plus 16 or 14, still over 50% chance. But the forecast model slightly favors to the upside. So again, this model is now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.